Welcome to the big interview here on Money Life, and I'm pleased to be joined right now by Eric Rittmeyer. He is the president of Fidelis Mortgage in Maryland, and we're going to be talking about, well, not mortgages, but reverse mortgages, because truthfully, reverse mortgages are a very different beast. It's not that you can't go to people who do mortgages and find reverse mortgages. It's that there's a different mindset for not only thinking about them, but for trying to figure out if you need them, how they're going to work for you, and much, much more. Now, if you want to learn more about what Eric does at his firm, you're going to go to fidelismtg.com. They're on Twitter at Fidelis Mortgage. Eric Rittmeyer, welcome to Money Life.
Hey, thanks for having me, Chuck.
Like I said, reverse mortgages take a different sort of mindset in terms of, you know, you're doing this because you need money, but you need to sort of do it the right way. I mean, and it's such a different mindset that truthfully, if you go through an FHA reverse mortgage, you're really supposed to get counseling before you do this, aren't you?
Yeah, not only are you supposed to, it's mandatory. So, a lot of people, I think there are just so many misconceptions floating around about this program. And my 12 years now of specializing in reverse mortgages, it's amazing how many misconceptions there are. And these misconceptions come from highly educated, very savvy financial people who don't understand how the program works. And one of the main things you just mentioned was counseling. It's mandatory. Ronald Reagan back in 1988, he's the one who introduced this legislation. So they've been around for 30 years. And the number one requirement of all FHA insured reverse mortgages, it's mandatory. Every single borrower on this loan must complete a counseling session with a third-party FHA approved counselor. So it's mandatory.
But a third-party FHA approved counselor, is that somebody like you who's in the mortgage business? Is that somebody like your therapist trying to go, are you nuts? You want a reverse mortgage? Is this your financial advisor who's maybe helping counsel you through who is this counselor, and how do you sort of figure out if they're the right people?
Yeah, it's not me. It's definitely not someone who makes you lay down on the couch and talk about your inner secrets. As a matter of fact, I'm prohibited as a lender is prohibited from conducting or getting involved at all with these counseling sessions. So as a lender, we're required to give our borrowers a list of at least 14 different counseling agencies, some that are national that can be completed over the phone, and some that have to be within a reasonable driving distance from their house. We have to give them with this list, and we cannot tell. No lender's allowed to tell the borrower which one to call. It has to be totally randomly selected from a list of counselors who have passed testing, who continue to maintain their credentials to stay on that list. So it is not the lender. We're prohibited from it. We cannot get involved at all with it. It's a non-interested third-party agency.
You mentioned that, of course, the list could be folks who you can do stuff with online. One of the big changes in the reverse mortgage business over the years that I've been covering it and following it is it used to be you sort of needed a specialist, and they had to pretty much be in your neighborhood. Today, you can watch television, go, hey, that reverse mortgage idea that I see that celebrity humping at me, that could be a good thing. Let me go sign up. How important is it for you to actually meet the people you're dealing with? I mean, you're going through the counseling, maybe that, but I would assume that getting some good counsel from whoever's working with you on the product makes a lot of sense.
Yeah, 100%. It's critical. I mean, it's not mandatory. FHA does allow. Years ago, they used to either the borrower had to meet in person with the loan originator or the lender, or they had to meet with the counselor in person. So one of them had to be met with in person. So if the borrower did counseling over the phone, the lender had to meet with the borrower in person, or vice versa. That was squashed years ago. So now a borrower, in theory, could complete this whole complete transaction totally from sitting in their house and getting on the phone with the counseling agency and getting a FedEx package from the lender. It's critical. I mean, any specialist in this program, any expert in the reverse mortgage program, is gonna want to sit down and face to face with their clients. And it's not mandatory. We don't have to do that. And some of our borrowers, believe it or not, in this day and age, it's 2018. Some of our borrowers don't want to meet in person, which is crazy, but they prefer to do everything digitally. So it's critical in my mind, dealing with my clients. It's extremely important to sit down in person with someone who can walk you through and explain everything, the cost, the long term, how does it affect your heirs, what happens if I move, what happens if I fall ill. So it's extremely important, not mandatory, but it's very important to meet in person with a lender.
People are going to hear you need counseling, you need to kind of try to put all this together. They're going to come away thinking, this is crazy. Yeah, they might. But reverse mortgages aren't crazy as long as you're the right person. Explain who the right person is, because there's definitely a wrong person. And unfortunately, some of those are the people that are getting reverse mortgages. But who's the right person and who's the wrong person?
Yeah, so first off, it's in the years, and again, there's just all the misconceptions tied to the program. It's insane, but the right person. Number one, everybody has to be at least 62 years old. So if you have someone who's 58, they're not going to qualify. You have to be at least 62, and it's someone who really wants to stay in their house. I mean, this program's designed to help senior homeowners offset normal monthly living expenses to give them the ability to age in place. This is going to be a loan for someone who wants to stay in their house, but maybe they're falling short. They're living off Social Security, a pension, some savings account money. They want to do home repairs. They want to fix their car. They want to do dental work. You name it. So this loan gives them the ability to access some of the equity without incurring a monthly payment. There are no monthly principal and interest payments with a reverse mortgage. So ultimately, who this is right for is someone who wants to stay in their house and is short on cash flow right now. That's who this loan would be designed for.
What winds up happening, you mentioned the issue with heirs and what happens if somebody gets sick. You want to stay there, but maybe you can't. What are those issues? Explain to my audience what they need to be thinking about when it comes to both family and health.
Absolutely, yeah. So the health piece of it, number one, there are no health requirements with a reverse mortgage. So I literally help clients who are in-home hospice. They're dying, and they need access to cash to pay for in-home hospice. So they're doing this loan knowing that their life is, they're getting the end of the road here. So they're from a health standpoint, there's no health requirement. The FHA requirement is that at least one of the borrowers occupy the property as their primary residence. If the last borrower vacates the house and is, packs up and moves out and moves permanently into some type of nursing home or something, when that last person permanently vacates the home, the loan comes due. By coming due, normally what happens is the property is sold. So the heirs, it's funny, and I joke about it, but I'm being serious when I say I think a lot of the negativity that's floating around about this program was originated by the heirs, because the heirs are normally the ones that aren't happy about it, because ultimately what ends up happening is the heirs get less equity at the end of the loan. This is a negative amortization loan, which means the borrower's accessing part of the equity now while they're alive. The interest is deferred to the end, so it's negatively amortizing, meaning the balance is going up over time. So in theory, at the end of the loan, when that last person passes away, when the heirs come to get their money, and they're calling me within days of mom dying, looking for their money. When they come to get their money, there's going to be less equity available because their mom, their dad would have used that in the form of no monthly payments. Now, the great piece to it is all FHA insured reverse mortgages carry a clause called non-recourse. So at the end of this loan, in the event that the balance exceeds the value of the home, because we get this question all the time, in the event the balance of the loan exceeds the value of the house and they're upside down, the non-recourse clause on FHA loans means that the heirs have no liability. They sign what's called a deed in lieu of foreclosure. They are totally hands clean walking away from that property with no liability.
Yeah, and that's going to help in the case, that there's contingencies on a house or any of those other sorts of things that might wind up making a deal tougher.
Sure.
What about in terms of values of these mortgages? I mean, you could take out various amounts. You can have basically what amounts to a reverse mortgage as a line of credit in terms of if you need to access more of it. But in terms of home values, does it really make a difference? Is there a point where you're too small, you live in a place where your home is worth $75,000, that's not going to work, as opposed to, you live in a place where it's $750,000 or whatever?
Sure. No, there's no, and you bring up a good point, because I do want to talk about what's called the Reverse Mortgage for Purchase program, which is a fairly new product that FHA just started allowing in January 2009. But the first part of your question is no. Because it's all relative. Somebody who's living in a $200,000 house living off of X amount of dollars, the income they have and their expenses they have coming in is probably going to be pretty relative to someone who has a $700,000 house. It's a percentage of their total income. So no, there's no minimum value, maximum value. The key there is it's a needs-based loan, generally speaking. So my clients are coming to me because the number one thing we get is they have a mortgage on their property, which is another misconception. A lot of people think when you have a mortgage currently on your property, you cannot do a reverse mortgage, and that's false. The vast majority of reverse mortgage clients currently have a mortgage on the house, and the purpose for doing this loan is to eliminate that mortgage payment because we replace that loan. We pay off that lien, go in the first lien position, and eliminate those payments. So they're doing this loan to eliminate the mortgage payment per month. That's the number one reason for doing a reverse mortgage. In reference to the purchase program, I want to talk about that real quick. That's again a new thing, January 2009, and that would be for a borrower who is living in their house currently but no longer wants to stay there because maybe they're empty nesters, or their spouse passed away. They don't like their neighbors, and we get all this stuff. There's too much grass. There's someone who's probably going to be downsizing, or in the industry we call it right-sizing. They can actually sell their existing home, take the proceeds from the sale of the home, and use those proceeds for a down payment on a new home, and the reverse mortgage is placed on the new property. So they would buy a new house, keep cash in hand from the sale of their existing home, and have no mortgage payments on the new property because we have a reverse mortgage on it.
Wow, that is interesting. I know a few people that might be interested in that one because, well, they are in the process of right-sizing. But this has been great. I have more questions. Unfortunately, I don't have more time. But, Eric, thanks so much for joining us, helping my audience understand a lot better how reverse mortgages work.
Appreciate it, Chuck. Thanks for your time.
Eric Rittmeyer, everybody. He is president of Fidelis Mortgage in Maryland. It's fidelismtg.com to get to the website. And he's on Twitter, and his firm's on Twitter at Fidelis Mortgage. Well, we just hit the halfway pole on today's edition of Money Life. But halfway, come on. It's like we barely got started. And you'll understand why, because when we come back, there's much more Money Life. Stick with us.